Good morning, Paul Georgie from Allendale. It's September 20th, Tuesday morning. Is it risk-off day or is it turnaround Tuesday? Grain markets are up here this morning, up about 11 cents in corn, beans, wheat, pretty much across the board. And it can be contributed to a lot of different things, I think. One is a market that was extremely oversold. It needed to breathe a little bit here. The bull needed to stick its head up, and that's what we're seeing as some support. But there's other things. The China, for instance, has been the big surprise concern being talked about in the corn yesterday that took the corn from down sharply to closing higher on the day. Couple things there is the same stories. It's just being brought out of storage here again, where China actually is going to release 3.7 million tons of corn out of their reserve because of the tight supplies of corn that they have. The prices continue to drive higher. Their pork industry continues to grow because of the exceptional demand and growth that they've had there. So even with the use of wheat as feed supplies, corn is still extremely important, and it's expected now that they're going to come in and buy anywhere from 9 to 11 million metric tons. Those are stories that have been talked about before, but getting some merit again. As yesterday, we finally seen prices here in the U.S. Below the prices in China that justified importing corn, and that is what got the trade excited, and we're going to be on China watch here today and probably for the next several days as we at 8 o'clock when the USDA releases their daily sales numbers, we're going to be watching to see if China bought any corn. And the talk was yesterday they did. That's what brought the corn price higher, and certainly providing some enthusiasm here this morning. There's also some good demand around. The Philippines bought some wheat, looking for more wheat. Bangladesh is looking for some wheat. So these lower prices that we've seen here in the U.S. markets certainly are creating some interest for purchases for exports anyway, and that's what we needed. We needed to buy our exports back in order to justify the price levels that we're currently at. Some studies that Rich Nelson did in our office here on a price retracement studies suggested that this price drop that we've seen in the Dees corn contract was right in line with other setbacks and other retracements that we've seen during this entire bull run from June of 2009. So we could have seen our low yesterday, and I think that's something that's going to have to be told here over the next several days. We did get USDA's crop conditions report yesterday afternoon. They downgraded the soybeans 2%, the corn 1%. Now you've got to take that with a grain of salt, as we are late in the season, and the crop continues to look worse as it dries down, dies, and prepares for harvest. So expect crop conditions to work lower there, although we already are harvesting in many areas. We're hearing yields actually in southern Illinois, where the yields have been extremely poor. They're actually coming in a little better than what they expected. So not saying a lot there. They're expecting 60 bushel an acre, and it comes in 70 to 80. So that's not a big joy there, but it certainly is seeing a little better than what the farmer was expecting in that area. In the livestock trade, we've got cutout values were down, 29 cents in choice, 47 cents in the select. Pork cutout values were higher. Cash cattle did trade a little yesterday at $1 lower, the 116 area in Kansas and Texas, catching up from the lack of any sales last week. The futures were under pressure, and this morning we're seeing some strength there, as a lot of markets are in this risk-on type attitude again. We've got stock market higher, dollar is lower, Crude oil is higher, gold is higher, so getting support from outside buying. I think the real key here as we move forward, we damaged the market technically yesterday in soybeans, for instance. We took out the 200-day moving average. That certainly is not a bullish sign. Bull markets do not do that. So you've got rallies I think you need to be looking at as opportunities to market the grain, to sell, trade it from the short side, as this market has broke the uptrend in many cases. So things to watch for. Expect a lot of volatility. The European situation has not gone away. It's still there. It's just quiet for a moment here. And the Greece situation is still a huge problem. It's going to weigh on this market and stick its head up at any time. So monitor that very closely. And certainly if you got any questions, don't hesitate to give us a call here at Allendale, 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you very much.